Good day, everyone. Today is the 27th of July, 2025, and it's 9:15 p.m. right here in the evening. Let's start. Today, we will talk about Williams percent R. This is a very important indicator. So, I don't usually use this indicator, but then if you're using this indicator, you should know some of the tricks that you have to know other than the overbought and oversold part. So you have to know about a very important part as well. So let's get to it. This is Tesla. Tesla, and as usual, I like to use a smooth Heiken Ashi chart, which shows the trend better than the bar or the normal chart, candlestick chart, which is all over the place for me. So I can't trade using those. It's very confusing, very too tedious for me. So this is a weekly chart. Let's check out this Williams percent R. So what makes this indicator so unique? So Larry Williams, you can just Google about him. Larry Williams is a very good trader. He once won the competition, and the competition actually trades using real money, and he made a lot of money using this method. Williams percent R. Why is it important for normal traders like you and me, and for people that want to trade using his method? This indicator is useful. As you can see from here to here, this is the bottom, reach here, the bottom. So what makes it to be able to capture these moves downwards? As you can see here, we won't see any divergence on smooth Heiken Ashi chart because you can only see unfortunately, you can only see either the momentum or the divergence. I choose momentum over it. So when the momentum slows down here, you can see it happens somewhere around here. So you can see that there's a divergence happening here. So you can assume that when the price is going downwards, the divergence on the indicator is pointing upwards. So there should be a divergence in the chart as well, which I don't use. This smooth Heiken actually doesn't show it out here because I don't really use it. So this is a divergence, which indicates that if there is any rebound, there should be a very big rebound ahead. So if you're trying to trade this kind of stock using this Williams percent R, Larry Williams method, you can just buy whenever there's of course, provided that the chart is above this moving average of 2-hour-day moving average is pointing upwards and everything. All those are basic one. So if you're trying to trade it this way, you can see that you can buy here when there's the second part here, when there's a higher low on the indicator. If you buy in from here, you have entered somewhere around here, quite similar to my momentum method. When the momentum slows down, I'll be buying here, accumulating. So from here to here, it will go up, which is the same thing. You just break above and then goes to the overbought area. When I reach this overbought area, is somewhere around here. The momentum is slowly slowing down. But it takes another, because this is a weekly chart, it'll take about 4 more candles, which is, you can see all the momentum slowing down. And this one is pointing downwards. So you can see this indicating that there is a strong weakness for this Tesla. You can see here a lower low, lower highs, and then there's a strong, very big divergence pointing downwards. So when it points downwards from here, expect to have some kind of move downwards because as the price are weakening, you can see here, it is weakening a lot. So if it breaks below this 50 here, expect some kind of drop downwards. But for now, it's still holding on. There's a news here that says that Elon Musk actually announced that there is a Model Y is in development, a lower price one. But then I don't think that's a good thing, because if you're doing producing some kind of electric cars, and you're the first brand to develop it and make yourself known to the world, you should make yourself a premium brand instead of a normal car for everyone. Make it like a Mercedes and some BMWs and everything. Just make them as some kind of premium product instead of everyone should own one car like that. So it won't really fight in the competition. Not that competitive, in my opinion. So it's not going to be a good news. I think it should continue to go downwards. Based on the charts, it is pointing downwards in the long term. You can see here, it failed to recapture this area here, this zone, this very important zone, previous high. Fails to recapture, barely moves up to 50% of the previous move upwards. So this is also a sign of weakness. Okay, back to this Larry Williams indicator. It has a very commonly known oversold zone, overbought zone. These two zones are, a lot of people use this to time entries to buy and sell, which I just mentioned here. When the momentum slows and this divergence appear, this will be a buy zone when it breaks above this level. So let's check it out. Vertical line we put here. So yeah, see, exactly at the change of color on the candles. See, exactly here. So if you are using my momentum method, you sort of like enter at the same time as Larry Williams indicator. So you enter here as well. Let's see the exit whether it's the same. So when it goes into overbought, you won't be exiting soon, because overbought can be like here to here. It will just continue moving all the way up, right? So we always aim for the breakdown from the overbought zone. So the breakdown is somewhere around here. Oops. Oh, there's no, you can't put it here. Okay, somewhere around here. Because when it break down, this is before breakdown and this after. So if it after breakdown, you can see that the momentum here, the candles is very small already, start compared to the previous 2, 3. So this shows that the momentum slows down. That is also where I will be exiting. When the momentum starts flowing, I will be selling all the way down, exiting my position. So Larry Williams indicator will show that the exit is here. So quite similar to the momentum method that I use. So just imagine if you trade using Larry Williams indicator, you will still have the same result as I've been trading using momentum. So let's check out as another important aspect of this indicator, the 50 line. A lot of people neglected this 50 line. It's a very, very important line actually. You can see here, when there's a break above this line, this indicator it indicates that there is a strong momentum here when it breaks above this one. So as long as I usually prefer to ask people to enter around after a break above this 50 line, and then hold it until it breaks the previous the overbought zone, like here. So you buy here and you exit somewhere around here. It's not much. This one is not much. But if you can check this out, you actually enter here when it breaks above this one. See this one? And then when it goes above here, you can see here. But this, if you exit here, you will have missed this out, this zone out. But then the 50 zone actually doesn't give you a very good entry point. But then it's sort of like give you a rough idea of whether the stock is going positive or is going negative. You can see here to here, that is quite a positive move. Considering here, when it breaks below it, it's turning negative. Of course, it doesn't catch as well as my momentum method, as you can see here. My momentum method actually I begin and the trend ended here. This candle, which is about 4 candles before this negative signal appears, which is there's a positive negative effect to it. If you exited here, and then this is another show that there's strength heading towards this move upwards, but then it ended quickly here. So it's the 50 moving, this is the 50 level of Larry Williams indicator. It shows where the trend is heading towards. Like here is heading downwards. So just put this one and notice where the trend is actually heading downwards. And then there's a rebound here, which is slow to capture it. So most people will neglect this line actually, this 50 line, but it can be used as a support. But I rarely use this kind of indicator. I prefer raw momentum. When you see the buying stops, there's some kind of reversal coming up. Not always. I can't say that it's always like that, but you can be certain that at certain time it will happen. Okay, let's see the dollar yen. As you can see, if you're using a smooth momentum chart, Heikin-Ashi like mine, a lagging chart, you're better off playing the overbought and oversold areas, in my opinion. So imagine if you entered here, you would have entered somewhere around here. If you entered somewhere here when there's a V shape pointing up, every time there's a V shape, you just buy in, you have entered here. Of course, it doesn't always happen. No chart is 100% good. So you can see here, there's instead of a V, there's a W. So it goes up and down. So you have most probably lose money here. Then another V appears and you enter here. And then the chart is moving upwards now, dollar yen. So it should go upwards, hopefully. But then there's a inverted V here. So it might reverse just like here when there's a inverted V. Indicates that the end is here and then it crash down all the way down. So just like here also, when there's an inverted one, so it crashed down. And as well here, this is a very big one. When it breaks down, expect some kind of move downwards. Not always, but most of the time. So if you're trading using Larry Williams method, you will make money, but then you need to be very, very careful with it. How do I select this one? Okay, never mind. So you should be very careful about what you're doing here. Aussie dollar. Okay, there's a breakdown coming up soon. This is a weekly chart, so expect some kind of downward move. If this breaks down, expect some kind of move downwards. So it might just touch here, maybe break down to here. because there's a breaking down somewhere around here. So it might not break down just like this one. When it break down, you can spread downwards until it breaks above here, and then continues all the way up. But then try not to use the 50 line. In my opinion, I don't really like to use the 50 line because it's too late into the game and too early to exit. So I prefer not to go using 50 line. Since I'm already using a lagging chart, it's better to use the what do you call it, the overbought and oversold line right here. When after a few weeks, months from here to here, it's been on an uptrend, but then there's a pullback all the way down to this line. If it breaks below, expect some kind of downward move. So Aussie dollar might weaken in the near future. Okay, let's check out the Bitcoin. All right, Bitcoin, just like what I mentioned, is still above the overbought zone, which indicates strength. It only weak when it breaks below, it indicates weakness. Most people will make a mistake of thinking that anything above this overbought zone, when it breaks above the overbought zone, it indicates that the chances of a pullback or drop is higher, but actually it's not. So there is many occasion like here to here, uh, somewhere here, yeah. So these areas you can see these moves just because it has gone up into the overbought zone. So just like here as well. So actually it's somewhere around here, right? Did capture quite a lot of move upwards here. It's a few months. So it does help a lot when this kind of moves. But then be careful of this kind of fake moves as well. It does happen quite a lot. You can see here. Every time it breaks below and bounce back. Just try not to short the market because you can see that the trend is up. So you're looking to buy and not to sell. So just wait for a pullback to this oversold zone and time your entry. And you might say, oh, it'll take a few months time for it to happen. Yeah, if you're trading using the weekly chart. But if you use this as a main template, weekly chart as a main template, you know that the trend is upwards. The candles are blue, so it indicates that the uptrend is this is above this overbought zone. It indicates that is a very strong momentum. So all you have to do is go down to the lower time frame and try to time your entry here. So okay, this doesn't look too good. Let's see daily chart. Yeah, daily chart shows right, not a lot of activities as well. You can see here when the pullback appears to be slow, or the body is very short, a lot of candles indicates that the buyers is overcoming all the sellers. So no matter the selling position, the buyers are there. But then the indicator shows that it has gone down quite a lot below this 50. If it goes down again, touches here and then a V upwards, this is a very good buy signal. So it should go about somewhere around here, buy signal, and then go back up. So if you want to buy, this might be a good timing to buy. So where will it go? It might go down to 115, maybe 115 or 112 might be a good position to buy in. So just buy in, and then when this happens, buy in and wait for it to go all the way up here until it only exit when there's a break below this red line. So you can try this kind of method. Personally, I don't really use Larry Williams method because my method is, I prefer my method because I understand it more well than this kind of, because there's just too much of this what do you call it, false signals. In my opinion, it's very hard to trade you, because of all these false signals. You will make a lot of small losses along the way, which it will break my heart if I'm doing this. So I prefer not to lose that much of money every time I trade. I do lose money, a lot of money as well, but then it's not that frequent. As long as you follow the momentum and the trend as well as the volume, that's the three most important thing. Okay, I try not to make this video too long about let's talk about something else when I have the time. So trade well, be safe, check out my older videos and subscribe. Thank you.